If you're interested in learning more about Charlie Munger's investment in Tesla, you've come to the right place. In this video, we explore the various factors, including shorter delivery times and Tesla's impressive expansion, that led Munger, a well-known figure in the financial world, to recently praise the electric vehicle manufacturer. We looked at what might have caused Munger to change his mind about the business, and we also talked about what he thinks of Elon Musk. Sit back, pour yourself a beverage, and prepare to learn more about why betting against Elon Musk can result in significant losses. But first, hit the like button, subscribe, and don't forget to share with your friends. With that said, let's get the video started. Tesla has made some progress in recent months despite the ups and downs of the price of its stock, cutting the wait time for delivery of its Model 3 and Model I cars to just 1 week. This information is very reassuring. The shorter wait times could lead to a substantial increase in demand for the company's electric cars, which could be one factor in giant investments. In a recent CNBC interview, Charlie Munger had an abrupt change of heart about the company. Despite his earlier skepticism of the electric vehicle industry, Charlie Munger showered Tesla with praise, praising the company for its remarkable accomplishments in rapid expansion and expressing his confidence in the company's ability to exceed his expectations. Munger went so far as to call Elon Musk's Tesla an amazing accomplishment for the American auto industry, but this praise contrasts sharply with his previous criticism of Musk and Tesla in 2018. In 2018, Munger praised Musk as a remarkable man, indicating that he admires much entrepreneurship and drive, but he also criticized his behavior, particularly his use of social media, which has gotten him into trouble on multiple occasions. Munger's remarks suggested that he believes Musk should exercise more restraint in his public remarks and should concentrate more on managing his businesses than using social media to discuss his plans for space exploration. Munger has expressed skepticism regarding its plan to colonize Mars, claiming that the project's costs and risks would be prohibitive. The reservations that some investors and industry professionals have expressed regarding SpaceX's most ambitious plans and his visions for colonizing Mars in 2019 are reflected in Munger's comments. Munger also expressed doubt about Tesla's valuation, saying that even though he didn't know if they would succeed, the price tag was excessive. Munger's remarks are a reflection of his methodical investing style and his conviction that businesses should be valued using their fundamentals rather than hype, or despite his reservations about Tesla market sentiment. Despite this, Tesla has become one of the most valuable companies in the world, with a market capitalization of more than $600 billion as of January this year. Munger's change of heart towards Tesla highlights the company's significant accomplishments and influence in the industry. I still recall this moment clearly from the Daily Journal's 2019 shareholder meeting, when Munger made his decision to invest in Tesla. During the Daily Journal's annual shareholders meetings, a shareholder asked Berkshire Hathaway's vice chairman, Charlie Munger, about his thoughts on Elon Musk and Tesla's recent ups and downs. This is where we need to pause and carefully consider Munger's words. He explained he did not want to surround himself with people who live in a state of delusion and occasionally win big. Instead, he preferred to have proven individuals in his personal life. Munger's response emphasized the value of self-awareness and striking a balance between self-assurance and modesty. He acknowledged that Musk may be eccentric and occasionally exaggerate himself, but that Musk also might be right occasionally, as suggested by Munger's comments, who sees Musk as a powerful individual who should not be taken lightly. An investor borrows shares of a stock from a broker and immediately sells them on the open market with the expectation that they will be able to buy them back at a lower price in the future. If the stock does decline in price as expected, the investor can then buy the shares back at a lower price and return them to the broker. Short selling is a strategy used by investors who believe a particular stock or security is overvalued and will decline in price. In 2021, the short interest in Tesla peaked at over $47.8 billion, meaning that investors had borrowed and sold shares worth that amount with the expectation of buying them back at a lower price in the future. However, in the early 2023, Tesla shares started to rebound significantly, rising by as much as 9%. This is because the company has been the subject of much controversy and speculation over the years, leading some investors to believe the stock is overvalued and suitable for shorting. Despite ongoing difficulties like COVID-19 lockdowns in China and supply chain disruptions, trend was fueled by positive news such as better-than-expected fourth-quarter deliveries and positive full-year delivery forecast for 2023. As a result, short sellers of Tesla experienced significant losses in the first few months of 2023, with losses of approximately $6.65 billion in mark-to-market. By assessing the current market value of the securities held in the portfolio despite these losses, the mark-to-market method is used to determine the value of an investment portfolio. While some investors are still betting against Tesla, the amount of shares being shorted has significantly decreased. and the company's overall market sentiment has improved. Tesla still has approximately $15.75 billion in short interest, which represents less than 3% of the total float of the stock. Charlie Munger has made additional public remarks about Tesla during this crucial period for the company. As vice chairman, he made a significant contribution to Berkshire Hathaway's success and helped to develop the company's investment philosophy, which made it one of the most successful businesses in history. Short sellers can attest that betting against Elon Musk can result in significant losses. Due to his investment expertise and general life wisdom, Charlie Munger is a well-known and respected figure in the financial world. Tesla and BYD are both businesses that concentrate on electric vehicles, but there are important distinctions between them. Tesla is an American business with a focus on clean energy products and electric vehicles. Elon Musk founded it in 2003, and its main objective is to hasten the switch to sustainable energy. The primary focus of Tesla is electric vehicles, and the company offers a variety of models including sedans, SUVs, and trucks. To support the growth of its electric vehicle business, Tesla is also investing in battery production and developing autonomous driving technology. Fleet Tesla's vehicles are renowned for their high performance and long range, while sleek design BIP is a Chinese company that also produces solar panels, rechargeable batteries, and energy storage systems in addition to electric vehicles. Unlike Tesla, the business was established in 1995 and has grown to be one of China's largest automakers. BYD manufactures both conventional gasoline-powered vehicles and electric vehicles. The company offers models of electric cars, buses, and trucks. In terms of financial performance, BYD has also contributed to the development of autonomous driving technology. Compared to BYD, Tesla has a much higher market capitalization. As of April 2023, the market capitalization of BYD was approximately $100 billion, compared to about $870 billion for Tesla. In terms of sales, Tesla has also performed better than BYD, delivering over 1 million electric vehicles in 2021 as opposed to BYD's 530,000. Overall, both Tesla and BYD are leaders in the electric vehicle industry, but they have various focus points and strategies. Tesla is more interested in creating high-end electric vehicles. Both conventional gasoline-powered cars and electric cars are produced by market, while BYD. Although Tesla has delivered more electric vehicles and has a higher market capitalization, BYD has also been successful and is expanding in the Chinese market. Munger has cited BYD as his all-time favorite stock despite Tesla having a higher market cap and greater global recognition. The main focus of BYD's extensive battery manufacturing capacity is on reasonably priced electric vehicles. According to Munger, BYD's ability to produce cars in China is almost absurd when compared to Tesla's. Compared to BYD, Tesla offers a wider selection of models, including luxury cars and trucks. BYD is primarily focused on producing affordable electric vehicles. Munger noted that Tesla decreased their vehicle pricing in China last year, while BYD was able to increase it. Tesla also delivered nearly the same number of vehicles in Q3 2022 as it did for the entire year. When compared to the same quarter last year, Tesla's Q3 2022 revenue was $2.454 billion, a significant increase of 55.95%. Additionally, Munger has issued a warning regarding the financial markets, noting the abundance of venture capital and other types of private equity funding and cautioning that the economy is in danger due to some people's pitiful excesses. He attributed the excesses in the financial markets, which are prompting people to spend more on commodities than they did a year earlier and contributing to the rapid inflation, to factors like GameStop in the Bitcoin market. Increasing global inflation rate. We appreciate you watching our video on Charlie Munger's investment in Tesla. It's always fascinating to see how well-known investors like Munger evolve their opinions on businesses. Munger's newfound respect for Tesla is evidence of the company's impressive development and innovation in the field of electric vehicles, as we've seen. In 2023, short sellers who bet against Tesla have had a difficult time. Munger's philosophy of balancing self-assurance and self-awareness serves as a great reminder for all of us to remember to click the like and subscribe buttons in order to stay informed of the most recent developments and insights from Wall Street gains.